concept. We help them to design the complete product or the complete opportunity from concept to creation. So that includes like hardware design, like we have like Altium licenses for hardware design, like PCB, Gerber layout, and all that activities. Then we do have SolidWorks for mechanical design and couple of other softwares like VAIO for PCB assembly when it comes to DFM. So once design gets ready, we need to review the design and more of a technical front that we do DFM, and then we take that opportunity for prototype first. Once prototypes are approved, it goes to the pilot batch and then it comes to the mass production. So PCB assembly, it's an heart of it. And then we have started aggressively for complete box build or system integration. So that includes like plastic, sheet metal, die casting, cable assembly. We started in-house post like our IPO journey. So, and now we are providing complete one-stop solution, even to that level that we can ship to the end customer directly as a part of drop shipment. We bring the complete product as a finished product, finished good, including packaging and all, and we can ship to the end customer directly. So again, this is in depth on what exactly vertically integrated one-stop solution. So once design and new product development comes into the picture, post that PCB assembly, then comes sheet metal, magnetics. So all this probably sheet metal, plastics and other mechanical parts we are outsourcing. But then the new greenfield project that we are eyeing at that how can we do it in-house, and how can we remove the or how can we self-reliance on that front too, along with the PCB assembly that we are doing it in-house. And then focusing down the line more on a more bigger box build project like size of a cabinet or ATM size projects or casino slot machines kind of a project. That is what down the line the goal would be. And ODM, that's an important zone now because everyone, when eyeing on EMS, has a $500 billion journey by 2030. Similarly, this particular segment of ODM, if you see post-COVID, to what one country plus one strategy is going around. So globally, like by 2024, the size of that ODM model is around $1.2 trillion. And that is now getting shifted to almost 2 trillion plus by 2030. And that is what the projections numbers are. And so now we have started focusing more on this ODM model kind of a projects where we provide the complete capabilities and focusing more on concept. So till date, like last decade of Mtron, if I say, whatever design projects were there, that was like initially we used to engage on production or manufacturing projects. Through that, we used to get design projects. Now we are trying to reverse the story where we can get a design project first, and then through that tailwind, we can get the manufacturing projects. So in that scale, like with high precision assembly and complete solutions, by like market ready packaging, labeling, and complete quality assurance kind of in product. So fit to market, we are just seeing so that any customer, like just an example in China or any other part of the world, where ODM model is still an proactively mode for like any global developed economy. So if anyone wants a product, they will just keep 10 products in front of you for same product line. You just brand it, name it, and then they will sell it with their brand name. So there are design houses in India who have this like IPs ready, but they don't know where to sell, how to sell. So we are just
Yep.
trying to bridge that gap as a complete ecosystem where we can own that IP and we can just see to it how can we deliver that to customer, because today no one is ready to wait for design say like 1 year, 12 months, because any design project you go, it's gonna take like years, like year or 2 year of time frame. But in
Yep.
today's fast centric world, no one is ready on that front. So we can just expedite that with minor changes here and that with base reference, and we can see to it how can we transform that. So that's part of product engineering service, whatever hardware, embedded systems, and power electronics, and a couple of other stuff that we do with multi-layer PCB design and which like softwares like Altium and SolidWorks. These are like global standards. Like for example, 13485 is for specific for MedTech, along with CDSCO, that is for made in India, vocal for local. And 16949, that's an International Automotive Task Force certification. So that is also complied now. And we have CSA, that is for Canadian Standard Association, that is Canada and South America market opportunity gets open up. And that even considering all that factors, we recently covered ESN 100 as well, that is for aviation and defense industries. all these sectors with keeping in mind environmental management system. So we have ISO 14000 as well. So like zero carbon credits, conflict mineral policies and all. So we just try to see that we neglect almost tends to zero as of now, and just try to see on how can we maintain environmental management system well. So this is in depth of what we have in terms of machineries. Will not go in depth, like everyone knows that more or less. So inline, we have inline SPI, inline automated X-ray machines, and it's more of a state-of-the-art facility where like complete without any human intervention, the complete PCBs can be manufactured in SMT.
I would like to add one line here, Sneh. Machine can be bought by 50,000 from China and 500,000 from Japan. So, but we have the top of the line machine. That's what I would like to highlight here because we like that, quality standards. So continue.
Definitely, and the new like AI integration, IoT integration that we are doing it. So even if I reflect on this, probably we have like a MES system, and it's an complete paperless documentation system and process. So even sitting anywhere of any part of the world, we can just see to it what is going around in the manufacturing shop floor, which what is going to be the next product line item that is going to be on the line, and much more. It's a complete collaborative systems that starts from RFQ to final shipment. Everything gets routed through that system itself. So these are just the product line that we are doing it as of now for specific to automotive. Like we do onboard chargers, climate systems. Climate systems get exported to European markets. Industrial and gaming. Industrial, it's major contributor. So more of an industrial pump controller units or HVAC kind of an PCBAs for that. Defense and aerospace, a bit on a lower end as of now. We already started. So recently there was an emergency procurement from government of India. So a couple of our customers were part of it. When they received the orders, we were passed on that PCB orders. A couple of them in drone industry or a leading drone manufacturer of India. We are the one who provides them the PCBA solutions. And down the line, we may even start box build assemblies as well for them. And then a couple of military communication systems related PCBAs for Navratna PSUs in Bangalore and couple of like southern part of India. Anyhow, like telecom has been a significant rollover now. So we are doing network switches and more of an security networking kind of an activities. MedTech volume would be less, but then they are high margin kind of an business. So smartwatch wearables specific to like MedTech critical equipments like X-ray or like ventilators. So PCBs for that. Then dental wearables where like we see that torch coming up and all that PCBs. That's our flex PCBs, flex plus rigid PCBs, combination of all. And then aerospace and defense, that's a growing traction as of now. And so we have a strong new inquiries as Nirmal stated. So we already got one momentum from Texas for specific to US troops and all. That is going to be for Navy and US troops. And India also, we are working aggressively. Probably down the line, we may have some strong like announcement on that front too. That we are bidding couple of projects to PSUs in India. Again, that's kind of an ODM model where we will support them from design, and from design we'll take it up to the complete production level. Way forward, like strategies, more focusing on ODM model and a complete system integration. Geographical expansion is in place. Post IP also, we started one remote sales office in Germany, and then one office in Texas, US under Mtron Electronics India directly. And then we also have done implementation of Lean and Six Sigma and couple of other programs to increase the operational efficiency and enhance that. And as a part of backward integration, we already started cable assembly in-house, and then as a part of forward integration and expansion, we already have announced a new greenfield project that is going to be coming up down the line. Post IPO, I believe like we have gone for a much more trajectory to what we have been eyeing at. We have said committed 40-50% CAGR growth, but we have been surpassing there quarter on quarter or half a year to half year and year on year, both last year as well as this year. And post IPO, probably we have reflected three results, and all three are evidence of it. And if you see like a major contribution that was there, that was part of the new ODM model project that we won, that is like almost 100 crore kind of an infrastructure. US-led firm, and it's an almost $8 billion company. And we are now targeting such kind of tier one prospects or tier one pipelines are already in place, where even they have floated now bigger RFQ than the current one, and we are trying to see on how can we encounter that kind of opportunities down the line. And PSUs like already started activities on that front. So last quarter, probably last 6 months or last 6 to 9 months, we are just trying to see on how can we take entry to that kind of players. So registration, certifications, and audits and all that were in process. And probably down the line, fruits are going to be there in that part of books too. Strategic expansion, as we stated, like greenfield project that will have down the line 6 assembly lines. Again, not immediately, but down the line. And that new lines that we like had last year, it's an AI inspection capabilities, and we can see even in the reflection in our current results that with almost minimal manpower or with negligible increase in expenses, we can increase our output to 2x, 3x, 4x kind of an activity. And then post like as global footprints, we started greenfield project. Till today, we are still debt free as on 30th September, and all the certifications now are in place where to enter into the new segments, new markets, emerging sectors. And past 1 year, we entered couple of new sectors. One was AI, one was IoT. We even entered this year green energy. That's upcoming because zero carbon credits and all that is something people are eyeing at as sustainable growth for in terms of renewable energies. And now we are eyeing at aerospace and defense also as one of the sectors down the line. So key financials, probably I think as everyone is aware, like we had an 112% year-on-year growth, and net profit also increased by almost 81% year-on-year. This is just a revenue breakdown on how exactly the bifurcation was, on what exactly the contribution was. So box build in first half of the year was almost 35%, and down the line that would increase to more than 50% in second half of the year. Still, as a part of to what everyone had in question during the tariff situation, we worked proactively and we just try to balance the way out on how can we balance with India and export as an customer base. And so this time almost 60%, 65% was domestic revenue with global clientele. And then down the line around 35, 40% was approximately an export market. Current open order book 463 CR, almost 3x the revenue of FY25. So if we see to what like RFQs we were having, when Mukesh stated in the last con call, so we were having an open pipeline of around 700 to 800 crores RFQ. Probably this is just a glimpse of that reflection on how much got converted on that front, and still couple of discussions are ongoing that may get reflected in second half of the year, because typically for us sales cycle takes place around 6 to 9 months and might be more as well, because that ODM project we talked about, it took us almost more than around 12 months of time to close on that project. So that is something like it takes time. So it's not going to be an overnight journey, but definitely fruits will be on a positive side. I'm not going in depth on results as everyone would have seen that. So industry insights, like by 2030, everyone is expecting 500 billion, and that's even government is tailwinding this sector on how can we just see to it. And down the line, even AI contribution to like what target we are eyeing at government of India. So that $1 trillion opportunity is something that we are eyeing on, and EMS is going to be one of the powerhouse with strong manufacturing design and export related activities. So these are the key segments and emerging areas or emerging investment areas as of now. PLI ECMS scheme, we are also exploring on that front. We already explored like a couple of things on that. So once we have a right time, probably we'll go with that discussion. But ECMS on component side, we already have started working on that front. I believe that's it from my end. Yes, important stuff like we received two awards this time. One from Elcina for export contribution towards in SME segment, and one was for related to business excellence on what exactly we are doing in ESDM as a sector.
But I think more likely today is Investors Day, so let them ask questions, ne?
Sure.
Thank you for taking up this presentation. So Vinayji, we can open up for the question answers for half an hour, and then we can conclude.
Sure, sure. All those who wish to ask a question may kindly use the option of raise hand. Once you raise hand, we'll invite you to ask questions. In case there's a problem at your end, please put a message in the chat box and we'll invite you to ask the question. We'll take the first question from Agrim. Agrim, you can go ahead, please.
Hi, good morning, sir. Good morning, everyone. My question here is, what is the revenue expectation for H2 26?
We already have given the guidelines of 40-50% CAGR year on year, and probably this time we may surpass it. And in first half of the year, we have given the projections of around 250 crore plus, somewhere around 270, 280. So we are in line with that numbers as on this financial year.
Okay. And the next one being, can we sustain the 25% EBITDA for the next 2 or 3 years maybe?
We already have stated in terms of EBITDA and PAT, to what we focus is upcoming trending technologies and ODM kind of a model. So EBITDA and PAT level probably like 20% on the northern side of it, probably we can expect that. And PAT also 15% plus or minus a couple of percent here and there definitely is going to be a sustainable one.
Okay, and one final question being, what is the segment which is like contributing very highly to the margins for us? Like which segment is contributing the most?
I would not say sectors, but I would say it's more of a product portfolio that we eye on, because as I stated, we focus more of an upcoming trending technologies, which is going to be just an example, for example, telecom players as of now, most of them are doing Wi-Fi 5 kind of an equipment. But today, to what equipments we are doing, that is Wi-Fi 6 level and plus kind of an equipment. So we invested to testing side for power electronics. And in that, we have capabilities to test up to Wi-Fi 7 kind of an equipments. So that is something that we eye on. And down the line, if you see the current open order, there is a tailwind towards an box build. So probably contribution of box build is going to be on a higher side down the line. That is going to help us to maintain and sustain our margins. Like structure profitability will be in alignment, I would say.
Okay, yeah. Thank you. That will be all from my side.
Thank you, Agrim. I request all the participants to limit yourself to 2 questions only, since there are a lot of participants. And we'll take the next question from Milroy. Milroy, you can unmute and go ahead, please. Mr. Milroy, you are not audible.
Can you tell me about some?
Have him write in the note field.
Yeah. Mr. Milroy, you're not audible. You can just post your question in the chat. I will ask it on your behalf.
Let's take next question by the time.
Yeah, we'll take the next question from Miss Haley. Haley, you can unmute and go ahead, please.
Am I audible?
Yeah.
Yes.
Yeah. Good morning, everyone. So we saw that the revenue growth has increased significantly, but on the PAT level, PAT margins, if you compare it with H1 of the last year, the PAT margins have quite gone down. And I did notice the COGS has gone significantly up if you compare it to the H1 of last year. So just wanted to understand the reason behind this. Like, is it the expansion plans that we're executing or any other reasons associated with the increment in the COGS?
Thanks, Haley, for the question. So probably if you see when we are eyeing on scalability down the line, then it's going to be part of it. But if you see the major part of it was because box build is getting contributed more. So till date, it was more of an PCBA or PCB assembly. But then down the line, if you see, then it's going to be more of an system integration. So that will include a cable assembly, plastic, sheet metal, or a complete system integration or a complete box build. So that's the prime reason. And probably that will help us to not only increase the revenue, but also margin will be normalized. I don't think so. Like our structured profitability will be in pain. So that is something that is still reasonable, like to what we are projecting as of now. And greenfield project, probably to what you looking for. So next year is something that we are eyeing on, somewhere around Q3 end or Q4 is something we are eyeing at to get it into the operational mode. But if something gets on a positive note with couple of things going around, we may be on a faster note. But as of now, you can expect to be operational by somewhere around December or next year Q4.
So are we expecting expansion in the PAT margins in the coming like second half of the year? Or this year it'll be on the same levels?
I would say it would be more or less same, with the same sustainability that we are trying to, because we already have stated like 15% with few percent changes here and there. So structured profitability will be in alignment.
Okay,
Just
okay.
to
All right.
just to add one line to Sneh, even though like situation never happened in the past, like tariff situation, geopolitical situation, we means Aimtron team did wonderful job to manage the and maneuver and make the right move to maintain the revenue and the PAT both. I think that's what really a good and beautiful thing about Aimtron. Continuous SWOT analysis, continuous thinking, how we can make it, how we can turn around, how we can be agile, and that's why we did it. So I think maybe adding to Sneh's answer. Thank you, Ali.
All
Thank
right.
you,
Thank
Ali.
you.
We'll take the next question from the line of Mayank Kapoor. Mayank, you can unmute and go ahead, please.
Yeah, am I audible?
Yes.
Hey team, thank you for the amazing set of results and the detailed walkthrough of the presentation. Most of my questions have been answered. Just one left, which is on the PSU Navratna order that we have bagged recently. Just wanted to understand three things about it. First of all, is it related to aerospace or defense? Secondly, is there any direction in terms of value or execution timeline that you can give us? And thirdly, is this a major part of the order book that was shared earlier?
Sure. So I think good tale of questions, I would say. So if I would like to give a glimpse of first on how exactly our strategy is going to be for defense program, because if you see defense program have like much longer qualification cycles and they are lumpy in natures with high working capital needs. So we would rather grow sustainably than chase the near-term optics. We have seen like a couple of peers who has been affecting on profitability. So currently to what we are working on is again an high-tech kind of an activity. So you may see that order activity might not exceed like a double-digit kind of an overall contribution, but the value of it would be much more higher than that. So recently, like to what Navratna PSUs we are working currently, so that is more of an military communication kind of an activity, radar and surveillance and all that, a kind of an equipment PCBs that we are working. So one example. So one PCB is just 32 layer PCB, and then one BGA module that we put on top of it. That BGA module is around 32 lakh. Just one module itself is 32 lakh kind of an worth kind of an module. So that kind of PCBs is something, or that kind of an opportunity is something that we are eyeing at. And so we are consciously working on it, but not that aggressive in defense right now, despite of opportunities. But yeah, in case again, like anything in global terms, definitely we are eyeing on it and working with couple of global players on just see to it on how can we go into that global, like to what other sectors we are doing. So something similar to that. Mukesh,
Like
if
to
you want
add
to add
one,
anything, yeah.
and I would like to add one line, Mayank. See, defense is a buzzword. Honeywell does a tailwind, and Honeywell does, the black box for defense. I'm just talking about. So what Aimtron is focusing on the control box. So the size of the order is also matters, but also the PAT and gross margin is also matters. So I think we are balancing that also, because a lot of companies they do defense business, but still they don't make money. It happens too. So we are very careful on that. Just to add that. Thank you.
Yeah, thank you for answering that. Just another question that I had. So I believe this was answered in the last con call, but I didn't get it fully. So I think in H2 of 26, we are going to have higher contribution from box build, as was stated earlier in the presentation. So should we expect some sort of margin improvement, either in terms of EBITDA margin or PAT margin on H2 versus H1?
That would be a bonus. But whatever right now we are targeting 15 plus minus 1 or 2.
Got it. Got it. Makes sense.
Thank
Thank you
you.
so much,
Thank
sir,
you.
and I wish you all the best.
Thank you.
Thank you, Mayank. We'll take the next question from the line of Deepak Poddar. Mr. Deepak, you can unmute and go ahead, please.
Yeah, am I audible, sir?
Yes.
Oh, yeah. Thank you very much, sir, for this opportunity. So just wanted to understand, first up, you mentioned about a lot of tier one pipeline are already in place. So our current order book is close to 465 crores. So how should, I mean, what's the quantum of the pipeline we are looking at in terms of accretion to our order book? So can you throw some light on that? That would be very helpful.
Sure. So if I just give you, like, as I stated in presentation as well, so just to give you a glimpse of it, that 97.5 crore or 100 crore kind of an ODM project. So that's an 8 billion USD revenue group or a global leader in providing solutions for data centers and communication network, who is eyeing on India as a key market for outsourcing design-led like ODM projects. So we already have secured one project, and down the line they are even eyeing at you can say 400 500 kind of an opportunity next 3 to 5 years. And then there are a couple of other companies like where initial phase of discussions are ongoing. So one is again related to power sector, who is a leading from India, again a global player based in India, where audits are completed, and that also can be a scale of around 50 to 100 crore next couple of years of time frame. So such kind of players, we already have started activities and engagement. But again, as I stated, for specific to sales cycle, it takes time. ODM project, it took us almost 15 months of time frame to get converted from like initial discussion to a final closure. Because then you discuss initially, then comes the when both leadership teams comes into the picture, engagement of them. Then post that we just see to it like RFQs are shared. Then comes the audit phase, post audit again negotiation phase comes up, and then it comes to the proto batch. Once proto is done, if in case design, then design, after that proto, and then production batch comes into the picture. So if you see the complete cycle of it, then probably 12 to 15 months is something that we eye on for a closure.
Okay. And what would be the total quantum of this pipeline? I mean, overall, I mean, that may get added to your order book over next 6 months to 12 months?
Same kind of a trajectory we have to what it was there in first half of the year. So we are just trying to see on how can we more get into the conversion mode. So same kind of RFQ pipeline we still have intact.
Okay. Okay. Any kind of year-end order book target we would have? I mean, compared to what 465 crores we would have currently?
Sorry, if you can be louder, your voice was not audible.
So I was just trying to understand any kind of order book target we would have at year-end FY26 end by March 26. What sort of order book we want to maintain?
I think a good question. So based on that, you can even assume next year revenue. But next year revenue, you can say again 40-50% CAGR is something that we are going to eye on. So we'll remain with almost, you can say, what we are projecting next year. Will be helping you out later end of this year. But yeah, we do have some targets internally on what should be the open book, and we'll give you more clarity towards the end of the year.
Okay, okay. That's very helpful, sir. I think that would be it from my side. All the very best to you.
Thank you, Deepak. We'll take the next question from Rehan Syed. Rehan, you can unmute and go ahead, please.
Yeah, sorry, there is some background noise from my side. So could you please check my chat box if you could?
Your voice is quite clear. You can ask the question.
Okay. Like, am I audible, right?
Yeah.
Yeah. So like, yeah, you have answered my couple of questions. So I have left with one. So sir, could you please share more on the nature of your recent AI IoT order from the US client, and whether such engagements could lead to recurring ODM programs to follow or follow-on orders regarding this side?
Okay, so both are different. So like AI, we already closed that order. We announced that last half of the year itself. That was $1.8 million kind of an order. and execution has already started on that front. And IoTs, there are like two major orders. One is from the US client that I recently spoke. So more opportunities are coming up from their door as well, related to the again ODM kind of a model itself. And the another local domestic project that we closed with 50,000 units down the line, they are even expecting more on that front. This 50,000, again, the engagement of deliverables has started, and down the line by Q4, our financial year, we're expecting something more on that trajectory too.
Okay, and just more clarification on the PLI scheme regarding the components. So, my second question is on the side of with the new PLI scheme for passive components and strong government initiatives for defense and medtech manufacturing. So, are you evaluating any participation in any of these policy programs? Like,
We are exploring on ECMS, Electronic Component Manufacturing Scheme, and specific to SFD, small fiber optics. But probably we'll give you more glimpse when we get 100% clarity on it. But yes, definitely explorations are ongoing for SFD, because we are already getting more tractions on telecom sector. So that's part of going to be telecom and network security.
okay, okay, fair enough. Thank you.
Thank you, Rehan. We'll take the next question from Akshay Shah. Akshay, you can go ahead, please.
Thank you for the opportunity and congratulations for good execution, sir. Sir, you mentioned that you are exploring also Airbus, some part of order from Airbus program. Can you elaborate that at what part of value chain are you working there?
Mukesh?
So I think Sneh, I can add a little bit here. So this is in a qualification process right now, is a prospect mode, and we are NDA and everything is almost done, and we are in the mode because we just got recently AS9.
Hello, your voice is.
Mukesh sir, we lost you. We lost your voice between.
Akshay, to give you a brief on that front, till Mukesh comes back. Probably initial engagement has already started. And again, as I stated before, that conversion is going to be something that's going to take time. Initially, any new projects comes or any new customer comes, that is a bit on a smaller edge first to start with. And then down the line, slowly and gradually, that size of revenue increases. But sky is the limit. There is no limitation to that. But definitely down the line, it can turn big.
So more, I want to. Hello.
Go ahead. Yeah, go ahead, please, Darshan.
Yeah, so I want to understand that what part of value chain are you exploring there? Are you exploring PCB or are you exploring box build or design there? What kind of opportunity is there for you?
So mostly we are an ESDM company, is that correct? So unless we have to take only PC board, we're gonna go force and take it. But we encourage our customer with full box and even cable. So on the program, we'll do cable and a small box also, control box.
Okay. And sir, are we having in Indian facility IPC A610 class 3 certificate?
Yes, sir.
Okay, and
we have also, we won 3 awards in a state level about the soldering and performance also.
Okay. Thank you so much.
IPC standard class 3 soldering technique. So we won the award also through IPC.
Okay. Thank you so much, sir, and all the best for future.
Thank you, Akshay.
Appreciate. Thank you.
We'll take the next question from the line of Darshit Shah. Darshit, you can unmute and go ahead, please.
Yeah, so thanks for the opportunity and congratulations on good set of numbers. So I have a couple of questions. So one question is on expanding our global footprint, and even in the recent of a fundraise document you mentioned about acquisitions. So can you highlight what is the roadmap there? What are we looking at? I understand we are also coming up with a greenfield capacity. So over and above that, we are looking something for inorganic growth. So if you can share some highlights of what's the need of going globally apart from the greenfield project that's already coming up? Mukesh, if you can share some thoughts on that.
Let me start with Aimtron 2.0. Nirmal, you want to share some glimpse first, and then I'll add.
Sure. So when it comes to the subject of M&A, every company sort of has their own unique rationale for why they're pursuing going down that path. For Aimtron, our circumstances are a little unique. We have a lot of expertise in how we can manufacture well. We have a lot of expertise in deriving profitability from a seemingly low margin business structure. And for us, finding a company with the right culture, finding a company with good talent, and helping guide them towards a stronger bottom line performance can be something that can bring a lot of value to the table. And so when we're looking at these M&A opportunities, I've personally visited multiple of these facilities. Very preliminary discussions right now, mind you. I don't want to make it sound like it's anything more advanced than what it actually is. But when going and evaluating these opportunities, what I'm really looking for is, do they have the right people in place? Do they have the right talent in place? Is this a culture that can work with us, that can work with Aimtron, that can work with India, and really grow our global footprint? And so that is very important. It's not going to take the place of the greenfield projects that we're doing. Those are all organic growths, and we certainly are not going to sacrifice any of our attention in the organic areas. But the inorganic growth is very good at opening up new levels of expertise, opening up new sectors, opening up new opportunities that otherwise, as Sneh mentioned, we might have to spend maybe 10 months, 12 months, 15 months trying to gain entry into. So Aimtron is very diligently evaluating all the opportunities. We're not going to make a short-sighted, short-term decision. We're going to ensure that whatever we select is going to be the best for our long-term growth and for your long-term future.
I think you want to see more a kind of a formal answer, but without telling SEBI we cannot tell most of the things here. But just to give you just a little highlight that we shortlisted 5-6 opportunities right now, and as Nirmal said, he already visited all 6 facilities, and we are trying to shortlist. Recently, just about a month ago, everything settled down about the turmoil in the White House. So looks like now people accepted whatever tariff is tariff, whatever the situation. So now started. So within a short time, you will get some answer from us or some announcement from us. So please stay tuned.
Sure. That was helpful to understand. My second question is, our venture into aerospace, particularly in defense. Sorry, you're speaking something, Mukesh. I'm sorry, I cut you.
No, it's okay. Continue.
Yeah. So my second question is on the our entry into aerospace, particularly, and you mentioned about the Airbus A350 program, and I understand, that the qualification process in all this is a pretty stringent and time-taking. But once you kind of get through, it's a long-term contract that you get in because of the criticalities involved, and even the quantum is pretty decent. So can you, share in which process we are in with Airbus as far as the qualification is concerned, and a little bit insights on how big this aerospace opportunity can be for us going down the line?
See, this is kind of a long process to even explain right now. In the essence of time, I would like to maybe take one-on-one later on.
Sure.
But right now, what I'm trying to say is we had a Japanese company called Nidec, and they literally failed us. And when we look at the reason to fail us, so they went to the final inspector and the person who was the final inspector has a glasses on eyes, So they asked question, when you went to the doctor to see your eye. So this person says 2 years, clarify anything, and they just failed. And then they explained that if your person never, calibrate eye last 2 years, his number may be changed or something changed. So we are looking those companies. They can look at that depth, It took us about a year to get to that level, to get an NDA, to, bring it to the factory and then still fail. I'm just talking about 4 years ago story. Now we are totally changed and we know that, we learned hard way. But those are the Airbus program or, some of the Caterpillar program or some of the program we are, we have in pipeline is almost 20 years program. Some is 10 years, some is 20 years. Again, I said earlier also, defense is a buzzword. A lot of people, they think, oh my God, defense. But, defense has a lot of things, plus and minus also. And we need to be a very balanced even defense also. And that's what we are planning to, accomplish. But we'll give you more information later on as the time goes through. Thank you.
Sure, thank you so much.
Thank you, Darshan. We'll take the next question from the line of Sumit Chopra. Sumit, you can unmute and go ahead, please.
Hello.
Yes,
Sumit, go ahead,
Sumit.
please. Hello, Sumit, you can unmute and go ahead.
Let's move to the next participant.
Yeah. So we'll take the next question from Praneeth. Praneeth, you can unmute and go ahead, please. Praneeth, you can unmute and go ahead, please. Ask a question.
Hello, thank you for the opportunity. So I was wondering about in terms of production capabilities. I understand. Hello, am I audible right now?
Yes.
Hello.
Yeah, you're audible.
Yes, you're audible.
Yes.
So let me give you
Sorry.
this answer in one line
I was
before
thank
you
you for the
elaborate the
opportunity.
question. Yeah,
Yeah,
let me
thank
give
you,
you the
Pawan.
answer one line.
So I was
have a
wondering about the
capability
production
up to-
capability.
Yes, we have a capability up to 1,000 crore.
Okay.
With minor, as Sneh also said in the presentation, with minor additional expense, we have a capability up to 1,000 crore.
With the existing.
Existing about 500 crore. And that's why we started Greenfield project.
So in terms of going forward, got it. So in terms of going forward, okay, I'm sorry for interrupting, but yeah, got it. So how much maintenance capex or what kind of capex will we be expecting to spend in the next 3 years? Let's say we already have 2,000 crores.
3 to 5%. So next 3 years, we no need more
3 to
than
5% of the
whatever we
top line, is
announced
it?
before. So Sneh, can you take it, because I don't have a clear answer here.
Sure.
A
That's
clear
fine.
actually voice here. I don't have a clear
So
question.
basically for 1,000 crore, to what current capacity we have is around 450 to 500 crore, the current infrastructure that we have. So, and next new coming facility that we are going to add up, so that is going to have additional 500 crore kind of an capacity on top of the current 500 crore capacity. So that new greenfield project that is coming up, so that will have 6 assembly lines down the line, and that will help us to reach this 1,000 crore kind of a revenue.
So what kind of asset turn do we expect from each SMT line with the new ones versus the old ones?
So probably even the current SMT lines to what we have is state of the art. So with one SMT line, we can approximately generate around 100 crore kind of a revenue.
Okay, there won't be much of a difference with the new ones and the old ones.
No, the currently that we have, it's a newer one only.
Understood. Got it. And in terms of the box
Praneeth,
build,
I would ask you to please join the queue. There are many in line.
yeah, sure. Thank you.
Yeah. We'll take the next question from Harshit Shah. Harshit, you can unmute and go ahead, please.
Thanks for the opportunity and congratulations on good set of number. I have, sir, 2 questions. One is about Greenfield Vadodara project. We have 6 SMT lines under construction, and you have said is a phased rollout. So can you please share the timelines of the rollout? how many SMT lines will be online in current financial year and in next financial year? And the second question, sir, is about this your order book execution. In current 6 months, we have executed order of 1226 million, and we have a 4639 millions on hand. So how I'm not expecting any number, but how much orders are we going to execute? Is there any timelines? What kind of order we are expecting in these 6 months execution? Thank you.
Sure. So we'll go with your second question first. So order execution probably to what numbers we have projected for this year. So you can consider that projections and you can do the reverse calculation. So based on that, we'll be able to get the like real numbers. So in short, we will be in line with the this year's projected numbers to get to that milestone in terms of an execution. And the new greenfield project that we are coming up with, so that is going to be a single floor kind of an plant, which is going to be with global standards. And that is going to be a like seamless production floor with like MES driven real-time traceability and couple of other IoT related activities that going to get imparted into it. And initially we'll have 2 SMT lines, and down the line, like once that two gets into the full-fledged utilization mode, then we'll add 2 more and then 2 more. So that is what the plan is. And then that 2 will have like injection molding and basic of sheet metal also in-house. So that will help us for sustenance in complete box build system integration.
Just the first 2 SMT lines will be ready by what time, sir? Is there any timelines?
Initially, 1 SMT lines, we are planning to get it operational by end of next year, Q3 or early Q4.
Okay, thank you.
Thank you, Arshit. We'll take the next question from Yamak Kumar. Yamak, you can unmute, please.
Hello, sir. Thank you so much for the opportunity. So, sir, I got 2 questions. One is on the fundraising and other one is on this SMT line timeline. So my first question is in case of fundraising is that in your last con call, you have mentioned that the equity is too precious to dilute. But then in this recent press release, you have issued preferential shares, share warrants. That'll be like they will convert into preferential shares in 18 months. So can you throw some light on that? Also, what is your timeline for like this SMT line, like for this whole 6 new SMT lines that will be coming up in the greenfield segment? So if you can, put it in proper timeline basis in tranches also.
Sure. So Mukesh will answer second question first, and then you can go with the first one. So specific to SMT lines, operational, like we are planning to have 2 SMT lines every year once it gets operational. So you can expect that next financial year we'll have addition of 2 SMT lines, and then down the line every like financial year we'll add 2 every year. That's what the plan is.
So, as a rule of thumb, 1 SMT line can produce up to 100 crore. Is that correct? That's what we already discussed, and we know everybody in this, industry right now, EMS industry. The answer is very tricky. Is that correct? We are a paid-up company. We don't have any debt. Why we are raising the fund? So on the other side, to bring up the facility takes at least 1.5 to 2 years, unless you buy something. So right now, our current capacity is 500 crore, 450 to 500 crore. And we are thinking that will be filled in 2 years, this year and next year. And in 2 years, that will be filled. If you go even 60-70% CAGR, it will be filled. So we need to prepare for the third facility or third, capacity. So that's why we thought instead of, taking the loan, let's get the warrant. And we calculate that, before we go to main board, if you can have at least, a facility ready for 1,000 crore, production capability. So that's what we did. Right now, the boom and $1 trillion, EMS industry, there is a lot of opportunities there. And we are feeling that it will require some time to set up the facility. So like a phase by phase, we're going to get the money and we invest the money. So it's good for investor also and good for us also. So that's why we went to the preferential round.
So then you said that debt will be a better option rather than equity. So that is somewhere a bit conflict that is coming up that I need a bit of
No,
clarification on.
I understand. That is always good. But if you have too much debt also, then it's also not good. Is that correct? So that we cap for, let's say I have an opportunity tomorrow to buy a 200 crore company. So the question I have is my paid up capital. I have to look at the return earning and everything. So at that time I can use that wild card. So that's why we did not play that card at that time. So there is so many things come in picture. Is that correct? So let's wait and watch, because now we also looking at M&A, right now exploration. We need some data over there too. Is that correct? So at that time, I think if we have a capability to expand more with our current capacity of financial capacity, I'm talking, and the debt, we can buy a better option. So that's why. But it will be too early to compare that much in a journey like this. Once you cross 500,000 crore, then you can compare, your debt is too high, or maybe this is and we still have about 69%, 70% still control on that. So it's not that much. We also put our own money too, so it's not that much. We dilute the equity also.
All right, sir. Thank you so much for the clarification.
Also, last
Appreciate.
to add on to that, a lot of exciting things are coming up on that front. So
Yep.
there would be mixed baggage of all, and down the line you will have more questions on that front.
Thank you. Due to paucity of time, this was the last question for the day. Mukesh sir and Sneha sir, would you like to have any closing comment before we end this conference call?
I think it was a good call, and it was very good questions. I see there is a lot of activities in an investor community also, that where Aimtron is going to go, what Aimtron has to give, what is the next move, where is M&A, how this sustainability. So one thing you will see from Aimtron is a transparency and hard work and teamwork. That's what we are focusing on it. Whatever we say, we try to accomplish, otherwise we don't say. So that is something we would like to put a challenge you, a trend in this industry. EMS is kind of a sector. You have a very much variety of people and factories you will see. But Aimtron would like to set a path for EMS industry, how we can do a quality product, how we can do a best product with best margin, and still we can sustain the you can have a top line also. So that is something we are trying to accomplish, and we'll be moving in that path, and we are going in that path, and I think time will tell, and I will let everybody regret that you are a partner with us, and most welcome to stay with us, and I think you will not regret for that.
If I can just add one more thing to that, I see that a lot of these questions, they're coming from a very good spirit. They're coming from a very good place of what can I predict Aimtron's success to be. I'm going to give you the short and simple answer, the best answer I can possibly give you. Up until now, Aimtron's philosophy has been to let the results speak for themselves. Please continue to watch over us. We'll continue to give you good results. Thank you, everyone.
Thank you. Thank you to all the participants and the management team. This brings us to the end of today's conference call. You may all disconnect now. Thank you.
Recording stopped.